Hello everyone, welcome to CryptoPi. In today's video, I want to discuss the question why the 200-week moving average won't save this midterm's bear flag. So what are we looking at? It's Bitcoin in USDT, and the green dashed line is the 200-week moving average. The first thing which we always do in our videos is switch on the two guiding lines. That's distribution line and the accumulation line. The distribution line is when the price crosses the distribution line, the price tends to go in the bear market, and accumulation line is the one when price crosses it, we see Bitcoin's bottom, and after a few weeks of consolidation, Bitcoin starts making the new run. For this particular year, I want to compare it slightly with the previous year's bear flag. Bear flags are usually when, let's say, you have upwards rally, then you get some downtrend, and the price usually tends to stay in this range. This is usually the bull flag. And then you see rally continue. This happened quite often. You can see it's over here, going upwards, downwards is the flag, and then continuing upwards. Then you see another cycle of upwards, downwards, and going up. The pattern repeats itself over here, and this one is a long bull flag where it goes up, then consolidates sideways and goes a bit downwards, and then continues to go up. Now, if we use the same definition and design a bear flag, these are all, by the way, these are all well-defined patterns. You can look it up, and there are numerous patterns, and one of them is called bear flag. Bear flag is exactly opposite. You have a downtrend, price rallies, it stays in this range, and then price continues its downwards move. Over here, after Bitcoin made its cycle high, price went down, we had bear flag, and then we had another downwards trend. If we drop down to daily time frame, we are looking at something very similar. We have this downtrend, we have this rally, price is quite likely to make some sideways movement or go a little bit upwards, making everyone think that we are back in the bull market, and then as soon as people think we are in bull market, it will continue crashing. The reason to say why 200-week moving average will not hold is whenever such kind of flags happen, it's a very rough analysis. Usually from where the pole of the flag starts, let's say this candle, and from where the price breaks out of the flag, let's assume it goes somewhere like this, you copy the same length and move it from the breakout of the pole. And this brings us to around 50,000. Just slightly below 50,000, of course. You can move it up, you can move it down, it's all subjective. But the idea here is that we have not finished the downwards rally. We are not in the reversal period. We are still in the bear market. And if we look at the historical pattern, we will continue to be in the bear market, because in the midterm years, the market has always been going downwards, and Bitcoin's bottom happens only after the price has crossed the accumulation line. Wait for the price to consolidate a bit. Forget all these flash crashes. It makes no sense to jump into these flash crashes. That's why there is a saying called avoid catching a falling knife. In every single flash crash during the bear market, if someone would enter long at this position And if they decide that, all right, I will hold it and price will go up, of course you see some pullback, so there is some rally. But then when the crash starts happening, the bull market is at highest momentum, then you'll be holding your asset, in this case Bitcoin, for quite some time. Imagine if someone entered here and did not exit here, they would have to wait 96 weeks, 670 days. That's incredible. Think about not holding an asset which is going down, rather than holding it for such a long time. Wait for the falling knives to settle down. In this case, you can think of settling down as price consolidating sideways after price has crossed the accumulation line. You see a bottom, and then price stays sideways, and then pick up the knife, ride the bull run all the way until the cycle tops. Bitcoin's market is fairly easy to navigate compared to other bigger assets. The 4-year cycle is not the first thing. It's not the first time that Bitcoin is the only asset. There are other assets where you can easily find 4-year pattern. The easy part of Bitcoin is that we have halving, and halving is more or less defined when it will happen. So the distribution line and accumulation line will be more or less always be defined plus or minus 1 week, or if you want to be generous, 2 weeks. Since these lines are calculated based on halving, the 4-year cycle in some sense is well defined. Additionally, we have confluence of the election years. So we have pre-election year, halving years, post-halving year, midterm year, and until now, all these years, Bitcoin has shown the same pattern, and that is it goes down in the midterm year. You see the bottom in the first month of the pre-election year, and the bull run begins in pre-election year. I think it's better to not grab the falling knives. Don't put too much belief in the idea that 200-week moving average is going to hold the support and we are going to see a reversal, and finally we will see a super cycle. There is no clear indication in the charts about it. So until then, let's wait and watch. Keep in mind the bear flag. We already have one bear flag. The second one is in the formation. Let's wait for price to reach the accumulation line and consolidate after the accumulation line. That would be all in this video. If you like the analysis, then do hit the subscribe button. I will see you in the next one. Bye-bye.